In 2020, close to 5 million businesses took advantage of the Paycheck Protection Loan Program, known as the PPP loan. Businesses used this money with the intention of keeping people on payroll, paying utilities, rent, and other associated expenses with running their business. The Paycheck Protection Loan Program was a program where business owners could borrow money from the SBA with the intention of never having to pay it back or have to pay very little of it back. So it was kind of like borrowing free money, that money that they could use to fund their business and pay some of their most critical operating expenses to keep afloat during the coronavirus hardship. In addition to this funding, it was originally the intention of Congress that business owners who borrowed these funds were not going to have to pay any taxes on the money borrowed. The IRS, however, has different ideas. So the IRS is doubling down on their position that no, they're not going to tax the money that you borrowed, but if the money was used to pay for some of these expenses like payroll, rent, utilities, then those expenses used and paid for by the Paycheck Protection Loan Program were not going to be deductible for income tax purposes. I wanted to make this short video to inform you of the tax consequences of using the PPP loan for some of your critical business expenses, or also so you can, if you're not a business owner, so you can help inform anyone else who is running into this issue if they're a business owner and they've used PPP loan funds, and you can share this information with them by sharing this video. Good morning, everyone. My name is Mike the CPA. Here on Money and Life TV, our focus is to teach finances, investing, and taxes to help people like yourself build wealth. Now, if you're interested in learning more about those topics, we would love to have you join our community simply by hitting that red subscribe button down below. Oh, and please hit that bell notification icon. Otherwise, YouTube likes to hide these videos. This article is specifically from the Journal of Accountancy, which is a great source to learn about accounting and taxes. So they published an article recently on November 19th that simply states the IRS is doubling down on their non-deductibility of PPP funded expenses. I'm going to leave links to this article and the actual revenue rulings and revenue procs that are discussed in this video. It says the AICPA believes that the IRS's interpretation denying deductions of expenses forgiven under the PPP program is contrary to Congress's intent. So as I mentioned earlier, I don't think it was the intention of Congress to have any of this money taxed, but the IRS is taking the position that they are going to tax it. It says Revenue Ruling 2020-27 addresses the question of whether a taxpayer that received a PPP loan and that paid or incurred certain otherwise deductible expenses can deduct those expenses in the tax year in which the expenses were paid or incurred if at the end of the tax year the taxpayer reasonably expects to receive forgiveness of the covered loan based on the otherwise deductible expenses. I'm not going to read this whole article, but I'm just going to read these two examples to you guys and then just follow up with my own comments as we wrap this up. It says, in one situation, the taxpayer applies for forgiveness of the PPP loan and knew the amount of expenses that qualifies. Meaning, the way I interpret that is they know exactly of how much they borrowed was used for payroll, rent, or utilities. Those are some of the expenses that would qualify for the use of the PPP loan funds. In November 2020, but has not been informed by the lender at the end of 2020 whether the loan will be forgiven. So they've applied for loan forgiveness with their bank, where they initially applied for the PPP loan, but it has not been determined if all their loan will be forgiven or not. So that's situation number one. In the second scenario, the taxpayer has not applied for loan forgiveness by the end of 2020, but knew the amount of expenses that qualifies. This is where the IRS comes in. It says the IRS says in both situations, the taxpayer has a reasonable expectation of reimbursement in the form of loan forgiveness at the end of 2020. Therefore, deduction of the expenses is inappropriate. The IRS cites in Section 265A1, which disallows a deduction for otherwise eligible expenses to the extent the payment of those eligible expenses is allocable to the tax-exempt income in the form of reasonably expected covered loan forgiveness. Don't worry, I'm going to interpret this for you guys in just a second. The IRS says that the fact that the tax-exempt income may not have been accrued or received by the end of the taxable year does not change this result, because the disallowance applies whether or not any amount of the tax-exempt income in the form of covered loan forgiveness and to which eligible expenses are allocable is received or accrued. So essentially what that is saying is whether or not you've applied for forgiveness yet, if you've used those funds for that were provided to you by the PPP loan or Paycheck Protection Program, or if you've applied for loan forgiveness and you know that eventually or you're likely going to have that loan completely forgiven or part of it, then those expenses are going to be non-deductible when it comes to your tax return. So let me break this in layman terms. So let's just say that under the normal course of business, you borrowed $100,000 from the Paycheck Protection Program. You used that $100,000 to help pay wages and payroll taxes and things like that for your employees, to keep them employed and keep them from unemployment during this COVID hardship that our economy and our country is currently facing. That $100,000 essentially is going to be added back to your income on your tax return. So if you've been keeping your books up to date, let's just say you use QuickBooks, for example, and let's say with everything factored in, you have these PPP funds being allocated to your wage expense on your financials, right? So your wage expense includes everything, including the wages you've paid through the PPP loan. And if they've used those funds to pay wages, well then usually you'll see an increased amount of wage expense on the books, right? Because that's where they've been using those PPP loan funds. And let's just say, for example, that a business we're looking at has a net profit of $200,000, okay? So they might, this whole year, they might have been planning that and paying estimates based on that $200,000 net income figure. But now, because of this ruling, they actually need to consider that their net income on their business is actually going to be not $200,000, but $300,000, because $100,000 of those wage expenses came from the PPP loan, which are not deductible. And so that $300,000 net income on their business now is it going to hurt them so much at the business level? No, not really. They're really going to pay tax on that on their personal income tax level, because that income from their business transfers from the business to be reported on their personal return. And that's where they're going to see the higher income. And that's where I think most people are going to be expected to pay tax on these non-deductible expenses. I wanted to mention this because not only should you know the ruling on this, but as it currently stands, now it may change. The Congress may eventually cover this and say, well, it's not taxable. But as of right now, it is taxable. And I primarily wanted to mention this because I think if people have not been in touch with their accountant or aware of these rulings, they're going to be in for a big tax surprise. Because some people borrowed a significant amount of money from the PPP loan. I know people I've worked with who've borrowed $500,000. Some people have borrowed over $1 million. So can you imagine that if you were planning to pay tax on one amount, but then I told you that based on this ruling, you now have to pay a tax on that amount plus $1 million or plus $500,000. I think a lot of people are going to be in for a big tax surprise. So hopefully they've seen this information, they're aware of this, but if not, please share this video. I think it's really important that people understand what is going to be hitting them from a tax standpoint. Now, the loan itself is actually not taxable in all situations. So it's taxable, or the expenses are non-deductible in the event that a person can reasonably expect their loan will be forgiven. But what if their loan is not going to be forgiven or not expected to be forgiven? Well, then you can actually deduct those expenses because that business owner is going to have to pay that money back. Or in the other example, the people are not going to have to pay the money back. So those expenses in which you've used for wages, utilities, and things like that, if you have to pay back this loan or part of this loan to the extent that you do not get the debt forgiven, you're going to be able to deduct those expenses. There is a safe harbor ruling, and it talks about it here in this AICPA article. I'm not going to read this whole thing to you guys, but just if that is your situation, then all or some of those expenses you've used with the PPP loan are going to be deductible, since you're going to have to be paying this money back. So there's two different scenarios there, and the way that's actually filed, it talks about what to do to indicate that on your return, because the IRS has every right to inspect your return, and they've actually mentioned this in their revenue rulings. They've talked about this, that they're probably going to be looking pretty closely at this stuff. So you want to make sure, if you're a business owner and you're going to be deducting these expenses because you're not having your loan forgiven, that you follow some of the guidance issued by the Journal of Accountancy and some of the things mentioned in the revenue proc. So that is listed out right here. I don't want to bore you guys with all this mumbo jumbo. It's a bunch of tax jargon and it's really technical information here. But if you follow this information, you'll know how to report that on your tax return, so that if you do deduct the expenses, you'll be okay. And even if the IRS were to randomly select your return for audit, you would still be fine in following the compliance. So in a nutshell, if your loan is going to be forgiven or expected to be forgiven, then those expenses you've paid with the loan are going to be non-deductible. If you expect all of your loan to not be forgiven, or only some of it to be forgiven, then to the extent it's not forgiven, you can deduct those expenses. So that's the general thing to take away from this video. Okay, ladies and gentlemen, that is all the information I have for you today. Let me know if you think this ruling is fair, if they should tax this, or if they should not tax this, or let me know if you think Congress is going to reverse this decision before the end of the year, or maybe even early next year. We'll have to wait and see, but I look forward to reading your comments. Like the video if you liked it. Please share this with others if you have business owner friends who've borrowed these funds. It's really important they know these rules. Subscribe to follow our weekly videos around finances, investing, and taxes. And as always, I will see you in the next video. Live life uncaged.